So again, we see gold heading back down, heading right back down to 1915. Take profit 11 as sellers are pushing price back down, take profit 10. And we should see price going back down to take profit 10, 1905. It starts at as soon as the price breaks below take profit 11, 1915. We should see gold heading back down. Take profit 10 starts at 1914 all the way to 1900, obviously, and then from 1900 to 1889 all the way down to 1884. This is take profit 9. So we should see gold heading back down to take profit 10 and then eventually take profit 9. And we can see this during the New York session. As I said, overall, again, gold is still in a downtrend since last week, February 24th, after seeing this bearish engulfing pattern at take profit 14. After gold pushed all the way up to take profit 14, 1974, creating this multi-high for the year. And now we should see gold heading back down. You can see gold heading back down from take profit 14 all the way back down to take profit 9, February 24th. In one day we've seen this move. And now we see price making what, lower lows and lower highs and lower lows and lower highs. And we see another lower high from February 28th to March 1st, 2022. And now we see gold, we see price making a lower low, back down to take profit 10, take profit 9. And we should see a bearish engulfing pattern by New York session. New York session starts at 8 o'clock, and we should see this happening pretty soon. So we have to look at the overall direction, and looking on a 4 hour, as well, and then we could go to the 15 for structure for entries, but this looking on a 4 hour, you can see on a 4 hour, on an overall, on a higher time frame, you can see that we're clearly in a downtrend game. We're clearly in a downtrend. Price was just making a higher low, February 28th to March 1st, 2022, and now price is continuing in this downtrend, as sellers are pushing price back down as this move already happened, because the banks has closed, because the United States and Europe has frozen, sanctions with Swiss with Russia. Now we can see gold heading back down to take profit 10, and I'll keep you updated on that. All right, gang.
Today's Triple Take, while it's focused on the war in Ukraine and the global response. Romain, you've been trying to amalgamate what is a vast array of sanctions.
Yeah, I mean, we've been talking about kind of how do you sort of keep track of all this. Of course, we know the U.S. imposed sanctions. It kind of came in different phases or tranches, if you will. Probably the most significant, of course, is what we learned in the last 24 hours. Of course, the sanctions directly against the Russian central bank. That effectively freezes any assets here in the United States. Basically, they're not going anywhere until the U.S. says they are. Of course, you got sanctions out of the UK. I thought some of the more significant sanctions, though, were out of EU, even though they were effectively the same as the US. The fact that now you're seeing the European nations more united here in pushing back, not only the ban on Russian transactions out of the central bank there, but of course you talk about the closing of EU airspace, which is huge here. And then there are a lot of other things, that crackdown on some of the state-owned media companies. You wonder sort of what the broader effect is, not only on the economic issues with regards to Russia, but whether it actually has a political ramification for Putin where he would change his stance.
Let's discuss all this with the expert. The impact, of course, on those sanctions, on the Russian economy, on markets. Myra Rodriguez Valladares, an expert, of course, on Russia and Soviet studies and a managing principal at MRV Associates. And we take a look at your history, dating back to some of the expert analysis you have of 1998, a Russian default, a long-term capital management blow-up. We have a Russian ruble volatility that is similar to levels that we haven't seen since then. Do the sanctions that you've seen in the last 48 hours, the impact on the Russian economy, do those look similar? What are you looking for when you take a look at the impact on the economy?
Well, what's truly different is the travesty of the invasion against Ukraine, right? What had happened back in the events that led up to the 1998 Russian default was the war against Chechnya. And so those were that was a pretty detrimental war in terms of the economy. Here you have a different situation. Yes, you have an unprecedented, horrifying invasion. But what you have is a very strong statement from the U.S. Treasury saying we're freezing your assets. markets. They did that on a Monday when the markets are opening, and so you're sending all the important signals globally. And you also have, importantly, not just sanctions from the European Union. You have Switzerland, which traditionally is neutral, so that also sends a very strong signal. But here, what's also very different from 1998 is that you have a very involved private sector. You have some key corporates that are saying we're divesting, and that hurts their pockets, but they're divesting. You have sovereign wealth funds. Norway announced early on today that they would withdraw. And so if you start to have more sovereign wealth funds, important asset managers say, you know what, we're going to work in concert with different treasuries around the world, I think you will see even more of an effect.
You're, of course, over at MRV Associates, sort of consulting businesses, helping them understand some of the risk management that they need, the commodity markets, implications, that sort of thing. How have lessons been learned from previous episodes? Have companies protected themselves to a certain degree? Will this happen again, or is this time it different?
You know, that's a great question. I think that when you talk about asset managers, huge financial institutions like the big globally systemically important banks, certainly the energy companies, they have not only much more sophisticated asset liability management strategies, but they also have financial derivatives. And so they certainly, many of them, in fact, will, I hate to say it, will make a lot of money, which I know one doesn't want to talk about that in the middle of a horrible tragedy. But a lot of commodity traders, you know, really thrive in chaos, actually.
I'm curious, so how integrated is Russia really into the global economy? Because I know we make a big deal of it. Obviously, they're an important player, definitely when it comes to energy and commodities here. But is it as intricate as maybe, say, a China or some of the other nations that maybe we kind of talk about that we can't sort of unlove?
And you really are hitting the nail on the head. That's right. I mean, we're talking about a country that represents less than 2% of global GDP. Of course, the story with Russia is commodities, commodities, and more commodities. It's not just oil and natural gas. It's platinum, palladium, it's oil. And yes, it's interconnected to the world economy, but not as much as we think. It's not China. It's not Brazil even.
Well, the reason I bring that up, because during the default back in the 90s, there was a lot of concerns about contagion.
Right.
And that's why you saw the IMF and the World Bank sort of step in and try to sort of, you know, keep the worst from happening. Is there a need for that? I mean, can you have a default in Russia and not have broader ripple effects in the markets? Can we withstand that?
It's hard. I think that the U.S. certainly can withstand it. I also think that Europe can withstand it. But there is a lot of volatility because of the uncertainty, right? And people really almost have to take a deep breath and say, wait a minute. Russia is a very small player in foreign exchange markets. It has a very illiquid currency. It is very small in terms of GDP. American banks' exposure to Russia is incredibly small. American banks are much more exposed to the U.K., Japan, Germany, Mexico, Brazil, China, as you mentioned.
So gang, you know, let's just go over Russia, Ukraine agrees to another round of talks.
Только что закончились переговоры с украинской стороной, которые длились примерно около 5 часов. За это время мы подробно прошли по всем пунктам повестки, нашли некоторые точки, по которым можно прогнозировать общие позиции. И самое главное, договорились продолжить переговорный процесс. Следующая встреча состоится в ближайшие дни на польско-белорусской границе. Есть соответствующие договоренности. До этого времени каждая из делегаций, руководство каждой из делегаций проконсультируется по всем переговорным позициям с руководством страны.
Украинская и российская делегация провели сегодня первый раунд переговоров, основной целью которых было обсуждение вопросов прекращения огня на территории Украины и боевых действий. Стороны определили ряд приоритетных тем, по которым наметились определенные решения. Ради того, чтобы эти решения получили, вернее, какие-то возможности имплементации в логистические решения, стороны уезжают для консультаций в столицы свои, и стороны обсудили возможность в ближайшее время проведения второго раунда переговоров, на которых эти темы получат уже конкретную практику развития.
So gang, all right, I'll keep you updated. As you know, Russia and Ukraine already had the meeting and they already sat down and talked. They had currently talked already. and about seizing this war and ending this war, starting World War III. As the banks who already went over that, they have frozen sanctions on Russia. So I'll keep you updated with this game. We should see price heading to profit 10. All right, game.